SBI it is. Let's first get in a quick stock check. Yesterday the stock spurted on the back of numbers as the markets believed that with the resolution process picking up momentum, the resolution of the NCLT exposure that they have to the tune of closer to 80,000 crores will happen faster than usual. And there was an expectation that maybe the NPA cycle has bottomed out, given what they reported in terms of gross NPAs and net NPAs. Poonam joins us with SBI's Vision 2020, the ambitious growth plans that they've laid out in lieu of what the stock has done and what brokerages are saying post earnings. Poonam?
Well, thanks so much for that. In fact, if you look at the overall results, Tanveer, yes, pretty much a disaster for results with the highest losses that the bank did report. But however, there is some hope in terms of the kind of stress that we may see probably in FY19. Hopefully, we are seeing that the credit cost probably have peaked out. The stress has peaked out. We may, of course, there is still stress, quite a bit of stress in the system. But NCLT resolutions are likely, and all eyes would be on that throughout FY19. Not just that, management has also stated their Vision 2020. They're seeing that the credit growth is likely to pick up to over 12% versus a 5% in FY18. Do know that this is also a cyclical, partly on account of a cyclical recovery that may happen within the system as well. They're also seeing the margins to improve to nearly around 3%, and they're expecting that they would be leveraging pricing power as well as optimizing the risk return metrics. They're expecting the credit cost in fact would be lower, or would be down 1.1% versus a 3.6% in FY19. So lower overall credit cost is what they see over FY20, which is nothing but lower provisions. As a result of that, they're seeing that the ROAs in fact is likely to improve to 0.9 to 1% by FY20 versus a negative ROA during FY18. Having said that, we're also saying that one most important parameter is the fact that how much of capital would SBI need. There is an expectation that they may, of course, need capital in FY19 and 20. They're also planning to sell some of the non-core to rather unlock value in the subsidiaries. That is something that would be keenly watched out for. Most of the brokerages remain bullish on SBI. CS states that the stock is trading at 0.7x core FY20 book, and as such, the GNPAs have peaked out. Nomura is also positively surprised with the operating profit. They're saying that the valuations for plus 12% ROE are fairly reasonable. Citi says that most of the stress is already recognized and growth is likely to improve. Jefferies also mentions that they are seeing the ROEs to reach to 15 to 16% only by FY20, and hence this is going to be slightly a gradual recovery for State Bank of India along with the cyclical recovery.
All right, Poonam, thanks very much for joining us and taking us through the SBI story. As you can see on your screens, all of the key brokerages are saying buy on the stock, with average price targets being put above 320. It's the way, again, it's a judgment call. It's the expectation the market has from the bellwether of the PSU banking lot. And it's a matter of looking at the glass as half full or half empty. And the market goes with the former this time around, which is why SBI is up 5% in today's session.